All right, everybody, welcome to another episode of the Bitcoin Bottom Line. I am CJ Wilson, joined today by Josh Oszewicz, and we have a special guest on that is going to kind of help us delve a little bit into the universe or the metaverse of crypto regulations and sort of the crossover points between how laws have evolved and what's interesting about being a lawyer in the crypto space. So, Yankun, welcome to the Bitcoin Bottom Line, and I guess we're gonna fire it off a little bit with your bio. Can you give us we were talking a little bit before we started recording. You've been in crypto for about half a decade now, more or less. But how long have you been on the legal side of things?
Yeah, of course. And thank you, CJ and Josh, for having me on today. It's, I'm always happy to talk about two of my favorite subjects, Bitcoin and law. So thanks for having me. As you mentioned, I've been working with crypto and companies for about 5 years now. And so things have really evolved from 2016, 17 till today. I started my career out at a derivatives and futures and derivatives exchange, and then also worked at a startup company that went public last year. So I really got a chance to understand the operational side of companies and understand technology. Now I get to take the skill sets I've learned and work with a broader range of clients. Today, I'm a corporate and financial regulations attorney at ICE Miller, located here in Chicago. And I work with emerging growth companies to VC funds and even Fortune 500 companies, helping them solve and bridge that gap between technology and law.
So I guess my question is, how do you, like when you went to school to study law, right? It was like, I would say, let's back up a little bit. So 13, 14 years ago, Bitcoin comes out, right? Where did you first hear about Bitcoin, and where were you on your sort of professional journey in that case?
Yeah. So I think the first time I heard about Bitcoin was from the show The Blacklist. It didn't even register. I think it might have been one of the earlier seasons. I had no idea what they were talking about, but they were talking about using Bitcoin as a way to finance illicit activities and didn't even register. Obviously, you don't, back, when I went to law school, we didn't have any classes around blockchain or technology. Those exist today now, and which is amazing for students to be able to submerge into this industry earlier on. But yeah, the first time I heard about it was through a TV show. And then eventually I had a lot of friends who talked about cryptocurrencies, Bitcoins. I had some friends who were early adopters and purchasers. I wish I purchased when they did. I might retired by now, but I came a little bit later in the game and, but really dove in from about 2016 onwards.
No, it's interesting because I think a lot of people have this story where they remember the first time they heard about it and thought it was like weird. I remember hearing about it in maybe 2011, 2012, but it was only weird things that I had heard about it. And then I had, obviously, with Mt. Gox and some of these other things, these high profile things over the years, I guess you were already, like you said, studying the broad regulation of the financial markets and stuff like that. How many of the 350 lawyers that are working at your firm would you say are like kind of either on your team or sort of in that thing? Because it seems like obviously crypto is expanding. There's all these different things that are going on with it. That's what makes it exciting. But a big law firm that does a lot of regulation or maybe fintech stuff, like what's the percentage of people that they have allocated to that study, I guess?
Yeah, it's growing. And, it's a tough question to answer because we all touch very different industries. And I think that's what made crypto regulation very tricky for many years, because it wasn't really a black letter law. There were no laws specific to cryptocurrency or blockchain or Bitcoin. But that doesn't mean the law doesn't apply. There are new asset classes being created all the time. And it's sort of, my job to interpret that and apply it to various industries and new technology. So we work a lot with funds, private equity, venture capital. We work a lot with companies, helping them navigate these new emerging technologies.
So I would imagine that you have, let's say, a typical hedge fund or something like that says, hey, we have this much AUM, we're managing this much money, but we do think that this is exciting. We want to get into the crypto space broadly. Do you guys have like material that you say, okay, listen, before we go any further, please read this, please watch this video, please, like stand on one foot, rub your belly, pat your head to make sure that you actually know what you're getting into? Because it is a real, even today, 10, 12 years in, it's still a little bit Wild West, especially for someone that's coming from the Wall Street kind of private or just private equity. Hey, we're going to buy some shares in this company. We're going to, that stuff. Crypto's so much more, there's so many more directions that it's going all the time, right?
Yeah, we don't have a primer. Maybe we should create one, but I think that's what my job on the call is to do, to really understand their business. And from that, tell them, here are the regulations and areas that you need to pay attention to. I think one thing that's exciting about crypto is that depending on what you do with it, you fall under a different jurisdiction. You fall under a different law or regulation. And that's what keeps my job challenging. But at the end of the day, we really spend a lot of time understanding our clients' needs. So hedge funds are a great example. Hedge funds, a lot of L funds have a lot of disclosure requirements. Now, you really have to understand cryptocurrency and their strategy in order to write these disclosures out. Bitcoin mining has been popular for a while, but I'll take that as an example. There are a lot of tax disclosures around, and I'm not a tax attorney. That's my disclosure of the day here. But there are a lot of tax implications. How you tax crypto depends on when it's mined, when it's sold. There are a lot of different implications. And if you don't understand the technology, you don't understand what the business and investment objective is trying to do, it's hard to tell your clients, these are the risks you need to write out in your offering memorandum so that they can present this and make sure they're covered.
Yeah, because I think that's one of the things that's really interesting is that like you have a hedge fund that is already managing people's money, right? So they're going to start to, let's say, get exposure to real estate, or they're going to get exposure to car dealership, commercial real estate, or they're going to own some car washes in the Midwest because, hey, it's dusty, we need to get a lot of cars cleaned, that's a good market. It's like the hedge funds are always looking for new ingredients to cycle into their portfolio, right? And they have the ability to kind of like add. So, but even with that, they're managing someone else's money. So like you said, those disclosures, it's like when you buy a house, there's 100 pages because there's been so many lawsuits. But crypto is so new still, and the institutional aspect of it is even newer, way newer, right? Crypto's 24/7. Bitcoin trades 24/7. The law, a lot of people think the law is sort of like maybe 9 to 5. So is crypto evolving? Is it going too fast for the laws to catch up? I mean, or are there certain instances where you've seen like the laws have been ready, or really old laws are still applying even though it's brand new marketplace?
Yeah. So old laws definitely still apply. We wish that, and I think there's a collected effort to try and educate legislature and policymakers to make sure that the laws do catch up and hopefully foster innovation so that it doesn't impede progress here. But laws, people have called this the Wild West for a while. I say it's just because we don't like it and it's not in the black letter, it doesn't mean that laws don't apply. We are still looking today at the test of what is a security or not under an old 1970s SEC and Supreme Court case. It still applies. It's still good law. A lot of folks don't like it. We wish it said something different, or we wish that there is some safe harbor for new projects who are trying to do things more innovatively.
Yeah, and I think that's what's interesting with having the states be different, right? So Wyoming has been trying to go with speedy banks and a lot of stuff that they've been trying to innovate there to create a sandbox effect. Texas has been very pro Bitcoin. Florida's been pro. We see New York is trying to ban mining because they're saying that proof of work is an issue. It really is interesting to see how the states are all adapting to this differently based on what their strengths are. But from a securities or I could say managing people's money aspect, how how different is the actual law in that regard, and how does crypto kind of weave in and out, maybe drunkenly at times, of these different lanes where you have some states are better to do business in than others? Is there anything to that with specific laws that you've seen?
Yeah, the state by state is tricky. It's tricky in the sense that no company, especially if you're a technology company, operates purely in one state.
Mhm.
So it makes it even more challenging to explain to clients, especially some of my international clients, that you have federal regulations as well as state by state regulations that you have to follow, and case law on top of that. So it's sometimes a very hard concept to envision. I think the states are being more innovative and that are allowing these companies for a safe harbor is great if you only operate in one state and that state only. But the reality is most companies don't. So it becomes really tricky and challenging as certain companies decided to move to Wyoming or Florida, but they still have to comply and need to understand they need to comply with any state regulation that they do business in.
So effectively, though, that a technology company or an exchange or something like that, they're really supplying a product, which is a service in a lot of ways, right? But they effectively have to limit the product per state if the state, or just eliminate that state from service at some point, right? Because you have these elements where, like, let's say BitMEX, for instance, is not allowed to operate with American customers anymore for whatever reason. So they track your stuff, and I guess they've had issues with people trying to do round and round to out technology the regulations. But what it comes down to is that you have these companies, whether it's like FTX or one of these exchanges that has like a big international presence, Binance, whatever. They're able to offer different products in different countries. So why are other countries, I guess specifically, if you could answer this, more free flowing with derivatives versus America? Because it feels like that's the one thing, that's the big product that we don't have here, right? Is that accurate?
I think we do. I think that the challenge is, maybe the heart of your question is, why is our regulation a lot stricter than some of the other countries? And, to that, I think it's good. It's good in the sense that we do have the American standard for a lot of things, and quality is sort of been that hallmark of what constitutes a good American standard, whether it's a product being made or whether it's laws and regulations that protect consumers and protect businesses. We've seen this a lot in the last year, even from the legal side. We've seen a lot of clients choose to start funds now. Obviously, Cayman's been a popular choice, but we see more and more funds move offshore and companies move offshore. We see DAOs formed out of Cayman, BVI, and token issuances from BVI. We see that change. We see a lot of companies who choose not to have any customers in the US because they don't want to be subject to US regulations. And that is tough. But what comes with operating in the US is hopefully a stamp of quality, or a stamp of knowing that you are protected and you have recourse as a consumer or as a retail investor if you do lose your money, or if something does happen, like the recent DAO hack of BZX. There is now a consumer class action as a recourse offered to folks that lost their money through this hack. I think that's one thing that US does offer, but obviously on the flip side, it means there are tougher regulations to follow.
Yeah, it's funny because it's, as with everything in technology, it's a double-edged sword, right? You have like the safety or the consumer protection aspect of having to jump through certain hoops, or the hoop being super hard to jump through, and then you have the sort of, I don't want to call it anarchist, but sort of like, hey, free market's free market, just do whatever. And you hear people at these conferences get up on stage and they say, hey, there should be no regulation. Other people are like, well, hang on a second. We do actually need to think that, like, there's people on the other end of this trade or whatever else, because there's so many scammers in general in life. And this is something that, like, a lot of people don't want to acknowledge, that there's actually bad people out there, and bad people use all sorts of tools, right? They use whatever tools they can to stay bad. That's like the thing. And we have to acknowledge that. That's just society. This is nothing we can do individually for that. But I think from a citizen standpoint, individual citizen standpoint, we have this choice to move potentially if we're really good with it within the crypto sphere. We could kind of do crypto stuff from anywhere. Like Josh could do his technical analysis from Portugal or Manitoba or BVI. So I guess, like, do you see or have you seen like an outflow of, let's say, intellect and creativity to other jurisdictions, or do you think that there's going to be an increase of that, or do you think that America is going to start, because America has drawn everybody in to Silicon Valley, to Hollywood, to Wall Street. That's some of the smartest people in the world live here as a result of wanting to work in those three industries that are very unique to America. But like, there isn't really like a superstar place for crypto in that. There's like kind of some places, a little bit like Singapore or BVI, some like freedoms, but a lot of it is just like really none of the countries have decided yet, right? Like who's going to try to be the magnet. And we're always hoping it's going to be America because we live here selfishly. But do you see anything like, I mean, if you're like looking 5 more years ahead, what do you see the world looking like in that regard?
Yeah, hopefully we'll have some clear regulations and people will choose to stay in the US instead. But we have definitely seen an outflow of projects, but probably less than what people imagine, because at the end of the day, it's about where the money's at. And there's still a lot of money here in the US. And whether you choose to operate your business from a foreign country or a fund from somewhere else, you're still most likely going to solicit and want US investors. And if you do that, you take US money, you have to follow US laws. So from that perspective, it's hard to really predict a full outflow of talent. And hopefully there's still a lot of money here left in the US after the market's tanking in the last quarter. But, people follow where their money's at.
It's the half yearly sale. I like to explain it like that. Every couple, there's a summer sale. You go to Nordstrom's or something. You're like, oh, my size. It's
mid-year
on sale.
sale.
I love it. Yeah, exactly. We're good. I'm fine with that. I'll buy some cheap Bitcoin anytime I can. Yeah, I think it's interesting because like there's this, you have these Bitcoin companies that are trying to draw in more people, obviously more users to crypto in general, right? But now with DAOs, right, that's its own thing. And there's some states are actually recognizing DAOs as a legal entity, right? Are there, like, what's the conversation like with, I guess starting a DAO, and then how do you like legally like separate the human from the entity in that regard? So that not the regulations, but how do you set up a company like that? Like, how does it even work?
So it's interesting in the sense that DAOs are fundamentally a group of people coming together that want to be decentralized and want to follow sort of their own governance and their own protocol to further objective. But they also want certain legal rights and protections, like opening up a bank account. They want to be unincorporated, but still be able to open a bank account. So it is hard to balance that, and then don't even put taxes on how DAOs need to be taxes on top of that. But the conversations to me feel very similar to conversations I had back during the ICO heights and the ICO craze, which is that a lot of people wanted to call token offerings not security offerings, and then they got creative with the names and changed it to something else, and they believe that as long as they change the name that they're no longer regulated because no regulator has put this in the law. But truth is, we look at the substantive over form, and that still holds true. And it's the same analysis with DAOs, with any emerging technology, and figure out what are they really trying to do. Bitcoin's a great example because Bitcoin Ether are two tokens that have been sufficiently decentralized and categorized as non-securities, or at least as of today they are. But other tokens or other projects, you can call it whatever you would like to, but it's really what are they actually doing at the end of the day? Is it truly decentralized? Is the DAO truly decentralized enough so that there isn't an impact and that you can't point to any central ownership or entity, so that there is no one to hold accountable if there are issues? Or is it not quite there yet? So that's really how we need to proceed with analysis.
Yeah, I think, go ahead, Josh.
No, I was just going to say, as far as like how that's like waxed and waned since the ICO days, have you noticed like an increase in quantity or quality of like questions or clients, as much as you can say, you know, like, are you seeing, you know, more well-informed entities coming to you and with questions versus, you know, 6 months ago, a year ago?
Yeah, definitely. And I think that's one of the reasons why there's been a wider adoption of Bitcoin and crypto overall, because more sophisticated players and institutions have come in, and there is more regulation or recognition that there is regulation around cryptocurrencies in general. So there has been more sophisticated investors, sophisticated companies who are trying to not just hopefully create a Ponzi scheme or do a fast raise, but really trying to create a product that lasts. So I think, you know, past the sort of ICO craze, we have weeded out a lot of bad companies, and now a lot of ones that are trying to create something, especially with the movement to Web3 and the Metaverse. I think people are trying to really create something here, and that's what's exciting.
Yeah, I remember you alluded to it at the beginning about the students being able to take courses in this. I mean, I remember when like the IRS saying you had to declare this like in 2015, 2014, whenever it was. That was a big deal. And they're like, oh, there's going to be a question on this exam about Bitcoin. Like that was a big deal. Or, you know, the CFTC obviously calls it a commodity, right? Like that's a big deal. And now we're talking about like just the craziest type of stuff, DAO, Metaverse, Web3. And have you noticed like the VC interest in just what's been going on in the past, even like 6 months, even despite of price, right? Like, have you noticed with price a correlation with quantity and quality again, as far as like the entities that are approaching you, or is that just agnostic of price?
I think it's a little hard to see from my side in real time. You know, we probably feel a lag, a 6 to 8 month lag, in terms of how people are pivoting. There's been a lot of still new funds formed, new companies created, new projects trying to raise money in the last year. Now, obviously, with the economic downturn, we'll see that effect probably in another 8 months or so. But I think, again, people are still generally, sounds like they're very interested to innovate. And you know, Bitcoin came out of the 2008 crash. So who knows what new innovation could come out of a potential downturn here.
Yeah, it's definitely the land of opportunity, I think, is different with Bitcoin, crypto, all these other things. The reason why I feel like when I talk to people and they say, you know, the thing I like about this, meaning, you know, this space in general, is that there's no real blockages to an ascension, right? If you have a really good product, if you have a really great service, if you have a good security protocol, whatever it is, if people are attracted to it, they're going to go for it. And there's choice. And crypto makes choice scalable because you don't have to buy, let's say, a skyscraper in, you know, Manhattan to operate a financial services firm, right? You could basically build a software in your basement, and that's the thing that's so interesting to me about the new entrants, the younger entrants to this space, because they're catching up on all these things. And like I'm a Bitcoin maximalist, so like I read all this like Austrian economic theory and all these other things, and I think it's so interesting because I keep digging deeper and deeper and deeper into this rabbit hole and end up teaching myself about just the broad macroeconomics of the world and how money works as a result of my affinity for Bitcoin, and seeing Bitcoin as like a sort of an immovable object. And I think my brother is an NFT artist, right? So he's like a very popular NFT artist, and we did a whole episode about NFTs and stuff like that. So we don't have to get too deep into the weeds on that. But his thing and some of my other friends that do NFT stuff is they say, hey, there's like a membership aspect to the NFT thing, which is like Bored Ape Yacht Club and stuff like that. Recently, Seth Green, who is a actor, Hollywood guy, got his OpenSea account hacked or something like that, and someone took his Bored Apes and something else, and then they're going to potentially be able to license it somehow. So I guess this is like, it kind of breaks my brain a little bit, because I think of it in the sense that I have possession of a thing, right? I have the rights to use it, discard it, whatever I want to do with it. It's on me. It's my fault. But with the sort of digital, I'll call it digital membership, right? A digital membership through the metaverse, through NFTs, something like that. How far away are we from an actual legal framework for that stuff? Because there's not really case law precedents in the regards of someone writing a smart contract that outsmarts the platform, right? There is definitely a law that if you drill a hole in a bank vault and you take other people's money, like physical money, or you hack their account and you drain their money, that you've caused them damage and you've taken that, and they can kind of, they find gold bars in your house, you're kind of screwed. But if someone rips off someone else's Bored Ape and then like posts it everywhere, then like, what is the real statute of, like, is that grand theft? Is it like, what are the real implications here for, let's say, bad actors in the metaverse, I guess is what I'm trying to say. And is there anything that you can point to say, hey, this is going to happen, or we've seen this happen, and this is how hard they get hit by the law, or anything like that? It's just a total curiosity question. It doesn't have to be.
Of course, we're touching into copyright and trademark and IP infringement laws here. So that's where most of the NFT activities protections have fallen under. I think recently, if not today or this past week, the courts just came out with its decision on the Meta Birkin. Not sure if you saw, but Hermes Birkin bags was created into NFT form, and that similar fact pattern to what you said that came out. The decision, they used old law and the same trademark and copyright law when they applied it to how to analyze whether the Birkin itself had protection or not. And it was interesting because I need to look more into this, but they talked about how if you're using a metaverse, you're using this Birkin metaverse, it might not rise to the standard of using commerce, which is a classic trademark standard. And so there's still a lot of uncertainty, but courts are using current laws and regulations and trying it the best they can to apply it to this brave new world. We talk about virtual real estate, but nothing in virtual real estate follows real estate law. And so it's a misconception in a lot of sense, but we're all trying to understand this and apply to what we know in the laws today to this area. But that's where good legislation and policy making will become very important, and I know a lot of people are working on this, trying to lobby and trying to put better laws and policies in place that make sense for this industry, but also hopefully protect all the people that have lost money, unfortunately, through bad acts, through Ponzi schemes and hacks and all of that as well.
The Birkin example, isn't there like some parody law where parody, where you can copy something that's not exactly, and sort of claim people know it's a Birkin, right? But
but it's a Firkin.
But it's like
fake Birkin.
That's interesting with the metaverse for sure.
Because I think people in the metaverse think that they can do whatever they want, but if they're harming other people, then they're going to get hit with the same laws. So I think
but what's the recourse for, like,
that's what I'm saying. What's the recourse?
For a smart contract with poor coding, right? Like, it's not your fault that it's gone. It's not really anybody's fault but the coder, I guess. Has that come up at all? As far as I saw something recently about this like 18-year-old who exploited something, or took a bunch of money through a weakness in a smart contract, and he's like, I don't want to give it back, right? Like, so how is that viewed in the law?
I mean, look, there's a lot of issues with that. And if you choose to never come back to the United States after pulling a scheme like that, maybe, choose a country with no extradition laws, maybe. But the reality is that we have, and this is one of the issues people have with the overreaching ability of the CFTC, the SEC, and certain agencies. You are not protected. You're committing fraud and you're committing any crimes. All of these agencies have jurisdiction to investigate you and to see what is going on. And it's not limited to just futures and derivatives under CFTC or securities under SEC. They have overreaching powers that allows them to look at fraud and manipulation and of the markets itself. So that's the part that I think a lot of people are getting in trouble, falling under one of those powers and being investigated for bad acts.
Yeah, because effectively, depending on how fraudulent your activity is or how illegal it is, you could get busted by the Secret Service, the Treasury,
Yep.
The FBI, the CIA,
DOJ.
whatever. Yeah, exactly. It's so new still, and there's so many things that are still to happen. I'm kind of curious to see who's going to be the first person that gets effectively crucified for doing something really bad on the internet. Other than, because there's plenty of people that claim things, right? There's people that make these big claims, whether that's an investment claim that, oh, hey, you buy this and it's going to go to the moon, whatever. Usually scams all the time, or that they're going to claim an identity, and obviously we've seen a couple court cases about that specifically, and just how that whole thing's going to evolve. Because as people spend more time in the metaverse, which seems like kind of inevitable, they're going to strip away their physical identity and sort of merge mentally with this digital identity more and more as they spend more time with their Oculus on or something like that. I really just hope that we don't see a further degeneration of activities as a result of that, because I think there is something to be said about like strong laws and strong truth and that type of thing. I think we should be encouraging that, but it just seems like people can't help themselves, that there's always going to be somebody that wants to grab more than they deserve, or they're going to want to grab someone else's thing, right? And they're going to want to take it for themselves.
And we hope that doesn't ruin it for the rest of us and for the rest of the projects who are trying to do the right thing. I have a lot of companies coming to me asking for compliance and regulatory help, and most of them are trying their best to do things correctly, but it takes time, it takes resources. It's probably, most companies out there are not 100% compliant 24/7 all the time, because there is some interpretation to how each law might be viewed. Some are very clear, some are less clear. So, we're always trying our best to comply. And I think those are the people that end up, and those companies end up getting hurt by all the other bad actors, because they do get lumped together. We see so many headlines now for crypto Ponzi scheme here, crypto Ponzi scheme there, this exchange got hacked. And now there's a lot more attention around the whole industry as a whole. And the people who are being investigated for being out of compliance are getting more crucified today and getting punished more under this administration than they have in the past.
But that's what mass adoption looks like, right?
Yeah.
People, more regulators, more laws, more attention. And if you have a family, the oldest sibling really sets the tone. If the oldest sibling is the saint and doesn't get in trouble, then it seems like everybody else has it a little easier. They get a couple more slaps on the wrist before the really big slap on the butt. But I just think that some of these crypto people have come from maybe a position of, they were eliminated because they lost their Series 7 trading license or something like that. So they're like, oh, I'm going to do crypto now, and they've kind of screwed it up for the people that are trying to enter in good faith. Because I do think that there's people across the spectrum, even in projects that I don't use or whatever, they're operating in good faith, and that's like where you might be, if the speed limit's 70 and you're driving in your car and you're going 75, you're probably not going to get a ticket. But if you run a red light and you bowl somebody over, you know what I mean? That's a completely different law violation, extreme situation. So I know you have to go. If you have anything you'd like to wrap up or see, from your perspective on not legal advice or financial advice, but just just something for us to ponder about as we drive home and think about our crypto lives a little bit.
Yeah, I think what's interesting is that because there's been so much more attention on crypto, and there's so much more attention now on the Hill, and people are really trying to lobby for better policy and better rules. And I think it's worthwhile to think, what would that actually look like? Not all rules and regulations are well thought out. And it takes a collective effort in my mind to really put out good policies. One great example is, the SEC has a new disclosure requirement, not for crypto specifically, but for all companies, that if you get hacked, you must disclose this within 3 days. Now, that sounds great in theory, but it doesn't work well, because if you're a company or a crypto exchange or anyone that gets hacked, you might not have this problem fixed within 3 days. And if you were to disclose that, you are basically telling the world, please hack me more. We know we have a problem and we're vulnerable. And we're disclosing it to the world. So it's a good policy, ideally. It's a good, well-intended policy, but it might not be the best for the industry, and it might not achieve what it's trying to truly achieve. So I think we talk a lot about, we want more clarity around crypto regulation, and we want changes to current laws and regulation that governs cryptocurrencies. But truly, what does that look like? And I don't have the answers today, but I think that's worthwhile to think, what does it actually look like? What are we trying to achieve? And then maybe from there, we can actually figure out what the steps are to get there.
Awesome. I love it. Thank you, Yankun. Great having you here. I know you've got another call to hop onto. Hopefully you're charging somebody a lot hourly for that. I think clarity, that's it. Clarity is the big thing. Clarity and understanding are like two pillars that if we get the people in DC and state by state to understand where things are and what things mean, what these words actually mean, and we can agree on the definitions, then the regulations will flow from a logical, sensible, point. And I really hope that's what happens. So that's what I'm working for. I'm glad that you're working for that as well.
Well, thank you guys for having me. This has been a great discussion.
All right. And thank you, everybody, for listening to another episode of the Bitcoin Bottom Line. As always, this is not financial advice or to be considered legal advice. Seek your own CPA, ESQ, whatever you need, and make sure that you're taking all the proper legal definitions into consideration before making financial.